What's going on, guys? Welcome back to the Independent Experience. I'm Indy XP, and we're coming to you again this morning, Tuesday, June 2nd, 2020. We had another evening of civil unrest across America. We're going to get into that a little bit more after we go through the morning market wake-up call. So let's go ahead and take a look at the markets and see where we're going to be starting the day off at. Gold is up slightly, currently at $17.45.34. Silver is down slightly, currently at $18.37, giving us a ratio of 95.02. Platinum is up slightly, currently at $856.99, and palladium has held fairly steady overnight at $20.41.25. In other metals markets, rhodium is down $400, currently at $8,800. Copper is up 1 penny at $2.46, and aluminum is steady at 68 cents. Uranium also steady at $34. Barrels of crude oil saw a nice jump overnight, currently at $36.29 a barrel. The Dow Jones, NASDAQ, and S&P 500 all three closed up yesterday. The Dow was up 91 points, closing out at 25,475.02. The NASDAQ was up 62 points, closing at 95,52.05. And the S&P 500 was up 11 points at 3,055.73. If you guys trade in the Bitcoin market, something weird happened last night about 7:30, and it jumped up over $10,000. I don't know. Bitcoin's weird like that. I don't get it. I don't understand it. I own some of it. It is lost somewhere in my house on an old cell phone. I don't know. I don't get it. You guys get it maybe. Bitcoin's currently at $10,091.02. If you guys happen to trade in the Utah Gold back, those are still going at $3.02. And, you guys might have noticed I, did a little bit of decorating up here. The bugs are still there. Oh, we haven't really never talked about what's behind me, I guess. I got a Malaysian leaf bug. I got a scorpion up there. Over here, I got some paintings that I've done in the past. There's a bunch. We're going to take a tour of that someday. Let's go ahead and I'm going to do an article for you guys today. It's been a while since we've done an article. This one is by Al Root. From Barron. This is an article about titled How the Stock Market Historically Reacts to Protests. There have been protests in pretty much every major metropolitan area in the United States every night the last 5-6 nights. Indianapolis, which is usually fairly even-keeled on things like this, has had some destruction downtown. Friday and Saturday nights were bad nights downtown. Sunday we had a curfew. Last night we had a curfew. I think we're going to have a curfew again tonight. I live in an okay part of town here in Indianapolis, but I live about a mile and a half from the governor's mansion. And after the curfew last night here in Indy, a bunch of people decided they were going to march right up Meridian Street, which is our main north-south road, closed the whole street down, went right on up into Meridian Hills, and got stopped by the state police. And it was pretty tense. It looked like it was going to be a pretty scary situation for everybody, but they ended up the cops ended up walking with the protesters back down south towards downtown for a little bit, and didn't have any looting or rioting downtown last night, which is great. I hope we see another day of that. But it was kind of scary, living that close to the action and helicopters flying overhead. And my dumbass neighbor keeps shooting off fireworks in the middle of war zone. So you think you're hearing gunshots, but you're really hearing some dumbass redneck with some firecrackers. But let's go ahead and get into this article. The U.S. is experiencing painful civil unrest across the country in an aftermath of the Memorial Day death of George Floyd, while in Minneapolis, St. Paul police custody, as well as the recent deaths of Ahmaud Arbery in Georgia and Breonna Taylor in Kentucky. Yet the stock market hasn't reacted in any of the tragic events yet. All three major stock indices finished higher Monday. The S&P is down about 5% for the year, while the Dow Jones Industrial Average is still down double digits for the year. Big tech shares such as Apple and Microsoft have performed better than average, pushing the NASDAQ composite almost up 7%, excluding dividends so far for 2020. The lack of reaction isn't surprising in one regard. Wall Street filters most news through the lens of share prices. It's a voting machine on the future of corporate profits. Still, investors are constantly on the lookout for economic risks. They don't always come from conventional sources, such as earnings announcements. Few pundits correctly call how COVID-19 infections would derail the global economy this year. The first thing Wall Street does when something new and unexpected happens is look to history for precedents. In this instance, that exercise sends analysts back into painful periods, including President JFK's 1963 assassination, the 1965 Civil Rights March in Selma, Alabama, the large 1967 Vietnam War protests in Washington, D.C., the 1968 assassination of Dr. Martin Luther King, Don King, sorry, and the 1992 LA riots, which broke out in the aftermath of the acquittal of several police officers put on trial for beating Rodney King. What does the reaction to these events show? Historically, the market looks past most civil unrest. Stocks aren't significantly more volatile in months following any of the events listed. What's more, the S&P rose in each year under study. Annual gains, excluding dividends, ranged from 4 to 20%. The market, to this point in history, could be forgiven for not reacting to headlines about civil unrest, a point made by a few Wall Street strategists in Monday research reports. Nicholas Colas, co-founder of Data Trek Research, for instance, also noted in a report in the 2011 Occupy Wall Street movement didn't impact the stock markets all that much either. A walk through history shows, in one respect, the overall resilience of the market. That resilience has been sorely tested in 2020 with the COVID-19 pandemic combined with new civil unrest. That makes this year different from the others' historical episodes. But the Dow, NASDAQ, and S&P 500 are all about 40% from March's lows. And it appears resilience is what the investors are betting on again. One difference, of course, is the pandemic. The nationwide protests have effectively canceled all shelter-at-home restrictions. That's one new risk, growing infection rates, and the investors should consider, even as the U.S. stock market powers ahead, disconnected from what Lee says is the mood of America. Again, that was from Al Root of Barron's. I think it's a very good article. We get to look back historically and note that a lot of the large-scale protests that we've seen here in America in the last 50, 60 years haven't really affected the markets really all that much. So it's a good sign for us. So let me know what you guys think down in the comments. Be interested to hear what you guys think about everything that's going on, what might be happening in your neck of the woods. If you guys enjoyed today's video, go ahead and hit that thumbs up button for me right there. It helps me out greatly. If you guys happen to be new to the independent experience, why don't you go ahead and consider hitting that subscribe and jingle bell right in the corner, bing bong, so you can be notified of when new content is coming out. If you want to check out some of the gold content, I'm going to put the card right here. That's going to be whatever the last video I put out before this one or whenever you're watching this one. I've been Indy XP from the independent experience, and I am here again to remind you, if the women don't find you handsome, they should at least find your pockets heavy.